Hello everyone, welcome to our video on accounting and its branches. In this video, we will explore the meaning of accounting, its significance, and its various main branches. Without wasting any time, let's get started with the video. Accounting is basically a systematic process of recording, summarizing, analyzing, and reporting the transactions which are financially in nature. In short, we can say that accounting is a process that can be categorized into four steps. First one is recording. Recording is the foundation of accounting. Every financial transaction, such as sale, purchase, expense, is recorded in an organized manner. Second step is summarizing. After the transaction has been recorded, these are grouped and summarized to give a clear picture of financial activities. This is usually done in the form of financial statements like income statement, balance sheet, or cash flow statement. And third step is analyzing. The summarized data is then analyzed to interpret what it means for the business. And this step helps in identify trends and pattern in the financial data. And fourth step is reporting. Finally, the analyzed information is presented in the form of reports to the stakeholder. Now, who are the stakeholders? Stakeholder are the person or group of person who are having business interest in your organization. It may include employees, investors, supplier, creditor. They all are stakeholder of the organization. Now we will discuss about the importance of accounting. First one is it ensures accurate financial reporting. It means that accounting provides an organized and reliable system for recording and summarizing the financial transactions. This ensures that financial statements such as income statement, balance sheet, and cash flow statement accurately reflect the organization's financial position. Second one is it helps in making informed business decision making. It means that accounting serves as a foundation for decision making by providing detailed insights into financial performance and trends. Managers, business owners, and other stakeholders rely on this data to decide where and when to allocate the resources. Third one is it helps in budgeting and forecasting. Budgeting and forecasting are the crucial things for planning future financial activities. Accounting provides the data needed to create a realistic budgets and projections, ensuring that resources are allocated efficiently and potential risks are identified in advance. The one is accounting ensures compliance with legal and tax requirement. It means that accounting ensures that financial records following legal regulations and tax laws. Proper documentation of income, expenses, and other financial activities helps the businesses to prepare accurate tax returns and avoid penalties or audits. Fifth one is maintain transparency and accountability. Transparency in financial reporting is crucial for building trust with stakeholders, including investors, employees, and customers. Accounting ensures that every financial transaction is documented, traceable, and reported accurately. Here are the main branches of accounting that we are going to cover. Let's discuss these branches one by one. Financial accounting is like creating a report card for a business. It involves preparing various important documents such as balance sheet, income statement, and cash flow statement, which indicates the financial health of a company. These statements are not just for the owner of the business, but it also helpful for the external users like investors and creditors who want to know the profitability ratio of the business or a organization. Managerial accounting. Managerial accounting basically focuses on providing information to the people who works within the organization, such as managers and executives. And it is totally different from financial accounting, because financial accounting looks at past performance. Managerial accounting is forward-looking approach, helping business make strategic decisions for the future. Cost accounting. Cost accounting is all about understanding the expenses involved in the production of goods or services. It helps the businesses to answer critical questions like how much does it cost to make this product? Where can we reduce cost without compromising quality? By analyzing these costs, businesses can set competitive prices and improve efficiency. Cost accounting ensures that business remain profitable while staying efficient and competitive in the market. So that is a cost accounting. Tax accounting. Tax accounting is like a financial guide for the businesses and individuals. So to calculate their taxes, prepare returns, and ensure that they are compliant with the legal requirements. Tax accounting is not just about filing taxes, it's also about planning to minimize the tax liabilities legally. So, tax accounting ensures that taxes are paid correctly and on time, avoiding penalties and maximizing savings. Auditing is just like a health checkup for a company's financial records. It involves examining documents to ensuring that all the transaction is accurate, transparent, and compliant with laws. Auditing is basically of two types: internal audit and external audit. Internal audits are conducted by the company to improve the internal process of the organization, while external audits are performed by independent professionals to verify the company's credibility. Governmental accounting. So, governmental accounting is specially designed to address the unique financial needs of government organizations at various levels. It may include local, state, and federal agencies. It ensures that public funds are used efficiently and effectively, ensuring the trust of taxpayer and stakeholders. By adhering to strict regulations and reporting standards, governmental accounting allows for clear financial oversight, which is critical for maintaining public trust and accountability. Forensic accounting. Forensic accounting is basically a specialized branch of accounting that merges traditional accounting techniques with investigation skills. Forensic accountants utilize their knowledge to examine financial record so that suspicious activity can be identified. In addition to fraud detection, forensic accounting can also be used in resolving disputes, valuing business, and assessing financial damages in legal cases. So, at last, we can summarize that accounting is more than just a numbers. It is crucial tool for managing finance, ensuring compliance, and making informed decisions. Each branch of accounting has a unique role, from helping business understand their cost to ensuring they follow our tax laws. By mastering these concepts, individuals and organizations can pave the way for financial success and stability. So, if you found this video helpful, don't forget to like, share, and subscribe to our channel for more insightful content. Thank you for watching.